Welcome to the Cash Flow Empire, guys, where every Tuesday at 7 p.m. Central, we bring awesome individuals like Letitia tonight. And we sit here and talk about, the dirty, ugly truth about multifamily and just real estate in general. And tonight we obviously have Letitia, one of our really, really good friends of ours. And Letitia, welcome to the show and thank you for coming. How are you today?
Thank you. I am so excited to be here. Look at all you guys. There's a bunch of you. Thanks for showing up. I feel like that's always the first thing, right? Just show up and then things happen. So yeah, I had no idea you guys had such a big group. So this is exciting. And I'm very honored to spend some time with you guys this evening. Just to tell you a little bit about, oh, there's a little message. Got it. Just a little bit about myself if you don't know who I am. Letitia Montelongo, and I am a partner and a VP of Investor Relations at Montelongo Capital. It's a company that my husband and I started about 3 years ago. I do commercial real estate, so that's sort of how I got into the space. My husband has been in multifamily for several years, and he had several doors under his name. And then during COVID, I could not show any homes, and it was a little bit of a disaster. I was sitting at home wondering what was going to happen, right? Funny thing about it, my husband and I had just gotten married. We'd only been married a year, so we were newlyweds, and the world, everything was there. We were going to go conquer the world, and then COVID happened, and I couldn't work, and he couldn't work, right? So he started doing mentoring on Tuesday mornings. And he started getting all these guys signing up for his free mentoring class. And he was teaching people all across the US Tuesdays at 9 a.m. how to do multifamily. So one day I just told him, I said, hey, do you mind if I get on your Zoom and listen? I won't say anything because I know you're on a roll with all these guys. So I basically had my own office in the house. So I went into my office. In the first couple of weeks, I learned how to do underwriting. And then no kidding, like in November, there was a house that came out on LoopNet, apartments that came out on LoopNet, and everybody goes, oh, don't go to LoopNet, right? But I found this apartment complex that had just come out on LoopNet on Friday. And I told him, I said, hey, I underwrote this deal. I want you to look at it. And he was like, yeah, it's okay. It was like 64 units. So I said, let's go see the broker. Let's go see it tomorrow. So Saturday, we drive across town. Of course, it's in San Antonio. And it's not the best part of town, but that's okay too, because it seemed like it was a deal. So we toured the property. I put in an LOI, that evening, and it was accepted on Monday. And then I was able to get one of my husband's other partners that I've been talking to, and we brought in a group of Chilean investors, and we closed on that property in 45 days. And I just overnight, I had 64 units. It was super amazing. I was so excited about it. And then things have it, the market got really great. We had a 5-year business plan, and we sold it in 16 months and returned, 39% to our investors. We 1031'd it into another property that we found. So it was great. We made like $2.5 million in a few months, right? So I was totally hooked on this. So ever since then, I've been going to every conference I can go to, every meetup. I actually head up a meetup in San Antonio, the Women in Multifamily. I recently co-authored a book with a couple of women that I think that are in this group, Real Women in Real Estate. And my job is really to go out and find deals for our company. We've closed 4 apartment complexes in the last 16 months, so we're doing quite well. We are starting a mentoring program and coaching program. Our first summit, like yours, we have our first summit that is in 3 weeks, and it's in Scottsdale, Arizona. And we have like a crazy lineup of speakers. I'm super shocked. I challenged myself to say, okay, I'm going to do my first meetup, my first event. And I thought I wanted to do it kind of bougie. I didn't want to do like a regular one. So it's a little bougie. It's like 4 nights, and it's like a super intensive 4-day workshop followed by 6 months of coaching. But the 4 days, I have great speakers like Neil Bawa. I think everybody knows who Neil Bawa is. He's going to come and talk about build for rent. The head guy, the guy who is in charge of the CEO of the Family Office Club, is going to speak with us, Richard Wilson. So we have 8 fabulous speakers, 4 days. We have private chefs. We're going to do yoga by the pool in the morning. So it's a very customizable, fun conference. It's only 40 people that can be invited to this because it's at a very upscale compound of 3 homes with lazy rivers. And so I'm excited. So that's kind of what we're doing right now. We're just trying to find our tribe, which I feel like every day I meet more people, which has been really nice. And I love to go have coffee and meet with people and mentor people. I just had a new girl yesterday. It was very fun. Her name is Kimberly Paveglio. I don't know if any of you know her. She's kind of very new in the multifamily space. I met her at a meetup about a month ago, and she was just like, I need help. And I think that's what I love the most, is just being super genuine and authentic and helping people where they need it the most. This girl is like a rock star. She is a critical care ICU nurse. She has 6 children, right? And she's like, I'm not doing that life anymore. I'm doing multifamily. She sold her house like 2 weeks ago because she just now read Rich Dad, Poor Dad. So she has sold her house, that she has 6 children, and she's renting a house because she's going to go buy some real estate with her money. It's crazy. Today, I met with her yesterday. I showed her how to do the phone and do videos. Today, she's already made a video, posted it on her page. She's like, this is where it starts. Follow my journey. So I think it's really nice to meet people. And I think everyone on here can pour themselves into someone else. So it's very exciting. And I'm so happy to be in this space with you all. So that's quite a long introduction. Sorry.
No, that's amazing. Thank you for sharing that, Letitia. And that is amazing that actually I see that you're doing these conferences, that you are doing coaching. And at the end, the whole purpose of that, and correct me if I'm wrong, you want to be actually providing value to people, right? So that's something that you are doing, right?
I did. Yeah.
Exactly. So you want to share with everybody, like why do you think that provide value to people is important in this business?
Well, I feel like my background. So before I was in commercial real estate, I actually was the senior vice president for Sallie Mae. So for 20 years, I managed a sales team, and I would go to colleges and universities, and I would meet with incoming freshmen, and I would do presentations to them and their families about how to pay for college, right? So I spent a lot of my life helping young people kind of start their careers and help them into getting lending and how to figure all that out. And then I was on my own, kind of doing my own thing since 2008. I've had several small businesses. But when I got into multifamily, it was such a great opportunity because so many people that I've been meeting, they all want to do this too, right? Nobody wants to go to work 9 to 5 anymore. And I think COVID totally changed a lot of people. They're like, I'm at home with my kids and I don't want to go back to an office and work. So I feel like there's especially women in the space that are going to I go to a lot of women meetups as well. And I'm meeting a tremendous amount of women that they want the freedom to be at home with their kids, all the time. And so I think teaching people and showing them the pathway to get this done is one of my passions right now. And I love the fact that there's so many people. I mean, I can't even imagine 2 years ago before COVID happened, or 3 years ago. I mean, everybody was so bummed out when COVID, they're like, oh my gosh, we have to stay home. And then people stay home for a year and they're like, oh my God, I never want to go back to work, because this is where the great stuff is, at home with our families, right? So I feel like that's part of it. I just want to teach people how to, build relationships, because I feel like the real key to investor relations is just really spending time with people and being very authentic and not chasing money. People will come to you if you tell them that you can provide value to them and that you really care about them and their families, right? So I feel like that's the shift right there. Because I know when I first got in the space, I was like, how am I going to raise $2 million? I ran out of friends really fast, right? So how are you going to do that? But I feel like it's providing value and just really being authentic with people and letting them know that, you can really help them. I'll give you an example. Like, my mom lives with me. She's 85 and she has cancer, and, she's in remission right now, but I take her every month to go to chemo. And I have visited with her oncology doctor for 3 years now. I have never, ever told him about what I do. I've never tried to talk to him about, hey, you want to do some real estate with me? But 2 weeks ago, when I was visiting with him and I was helping her, and I was on my phone because I was trying to return a text, he goes, what do you do? And I said, oh, my husband and I, we do real estate investing. We buy apartments. He was like, and this is a doctor who's in charge of all the oncology. He goes, oh my gosh. He goes, I so need to buy real estate. He goes, I have a tax problem. Do you mind if I send you my number? I was like, no, I don't mind. So I met with him last week. He has $2 million he needs to place, and he wants me to help all of his friends. So I feel like it's just, you got to take your time and be really authentic and just don't chase, because that's the best part, when people are just really needing your help. And you have to believe that you're the one that can help them too. So
Yeah, I love what you said earlier. And I mean, it kind of domino effects into what you're talking about, helping people. But I do want to just kind of backtrack a little bit and just just, you said something earlier, your story, you said, I jumped into this industry. I was brand new. I learned how to underwrite. And then the first deal you found, you submitted an LOI on. And I think you just saying that alone, you inspired everybody in this room that, you know what, this is possible. I can do this too. It doesn't matter how long I've been into real estate, as long as I kind of, believe in myself and make the effort to get on LoopNet, to get on Crexy, to believe in yourself, that you can talk to these, brokers and, take action. Because the first thing you said is like, hey, we toured that property that night, that Friday, submitted an LOI, Saturday, like this is really a time crunch game. And guys, if you're hearing this, I hope that sparked you up a little bit. Letitia, we do have a lot of people that are newer in the industry, that are here to kind of like be that's why they come every Tuesday, to get inspired. This is why we do this, so that people can listen to people like you, so we can listen to people like you, to give us hope, to continue to strive, and to get that rush, like, what, if she can do it, then I can do it too. So I just kind of want to tip my hat to you, and because I know you inspired a lot of people in the chat, that if you can do it in such a short period amount of time, then so can they.
yeah, it was funny because on this call that my husband would have every Tuesday. So like I underwrote the deal, right? And then so the next Tuesday he goes, show them the deal. And I said, okay, so I offered 5,065,000. Of course, these guys are going, oh, it should have been only 4.9. They're not going to accept your offer. And just on and on. It was so funny. So I was so excited that my number was good, and it was good because we made a lot of money on the deal. But yeah, I think it's just that, none of this is rocket science. I mean, we're basically flipping houses, but there's a bunch of houses all put together, right? It's not that hard. But I think it's just like anything. You just have to try stuff. I know now when I drive down the highway and I see these giant apartment complexes, I'm like, I'm going to own like one of those 500 unit apartment complexes. I don't know how I'm going to do it yet. Because, now we just have like, I think our biggest one is like a 200 unit, right? But, I want one of those. And I think it's just the mindset and thinking that you can do it, because like, there's nothing, I mean, I'm not going to say there's nothing special about the people that do that. It's really, there's something special about all of us, and we can all do it, right? And I think that's the shift in mindset. Like, we all have skills that we can do things like this. I mean, I underwrote a deal. I am terrible at math. Like, I am the worst. Even everybody on my team now, because we're kind of growing a little bit, and we partnered with our asset managers, and we're forming a little bit of a different company, and we're kind of strategically changing the way that we do things. And I don't know if you guys are all familiar with the EOS system, the entrepreneurial operating system, right? So we actually have taken that model. I used it when I was in corporate America, and we're incorporating it into our company so that we make sure that we stay on track as we're growing really quickly, because we want to make sure that we don't make a bunch of mistakes and waste money and time, right? So as we're doing that, I thought I was going to be like the integrator. I was going to be the one that's going to go around and tell everybody what to do. But really that's not my role, because I'm not really good at follow-up, and I'm not really good at numbers. But what I am really good at is finding opportunities and deals and bringing them in-house for other people to work at that. And I'm really great at finding really amazing people that want to be on our team and that want to work with us. So, everybody has their strengths and weaknesses, but if this is what you want to do, I think everybody should get a group like this that will inspire them, or get a coach. And you don't have to go pay a ton of money for a coach. A lot of people will coach you for free. They just want to help you, right? So I think the quicker you get coaching, though, the faster that you'll get traction in this business. And it's okay to screw up too. That's another thing. It's okay. Just so everybody knows, because I know a lot of people are like, I don't want to make a mistake, but that's where you grow. So just keep making mistakes, and you'll just keep moving forward. So.
Awesome. So you had this amazing career, right? Corporate America. I mean, what people think is in the box of like, you had, a job that a lot of people would want right? You're taken care of, you think that, and your life changed a little bit. And I think there's a lot of people in this call that are transitioning from, a W-2 job to, pursuing this full time. So when you talk about the importance of relationships and being authentic and that sort of thing, and, just stepping outside of the box, what are some things that, you like looking back on, or maybe somebody that just feels a little timid to, start having those conversations? Like, what are some tips that you give, younger people just stepping into this on how to, have conversations and be around people that maybe you don't know, you're not as comfortable?
Yeah, and I think that's the thing too, because if you don't know a lot about this business, and like you go to a conference and then everybody there knows what they're talking about, it is a little intimidating. So I think just kind of being a sponge around people like that. I know I went to I guess it's a year and a half ago, is the first time I went to a big real estate multifamily conference, because I had kind of been doing it with my husband. The first one I went to was Multifamily Mindset in like Austin, Texas. I don't know if you all know Tyler Devereaux. He was the speaker at that. He was great. I thought he was awesome. So, that was, everybody that was there knew more than me because I had just started. So I just kind of listened more than anything else, but I still am never scared to like ask questions, even like, I'm like the first one to raise my hand at conferences and grab the speaker and ask the question, because I know that somebody else is thinking that, right? And because of my background, I've spoken to large groups for years and years and years. So I'm really comfortable in front of those types of people. So in large groups, so I'm good. But I think just really just following people around and asking them what they're doing and what's really working for them. And just don't be scared of making a mistake. I mean, I feel like, that's one thing that in our team, we always say, like, what's the worst thing that happened? What is the worst thing that can happen? Really? Are you gonna make a mistake tomorrow and lose your home and your kids aren't gonna get to go to college? No, what's the worst thing? You might get in a bad deal. What if you get in a bad deal? You probably have partners that can help you figure it out, right? I mean, there's lots of people out there right now with floating rate debt that are just dying right now, and we have 4 that are great. And then we have 1, but we've worked through it the last 3 or 4 months. Like every week calls with our asset management team, our property management team. You just have to take a hold of it. And we have figured that out. And we're finally getting that loan refinanced. I think a lot of people think when people have floating debt, they're like, oh, just go get it refinanced. It'll be easy, right? Well, when you go refinance a loan that's on floating debt, your apartment has to perform as if it were when you're first getting your first loan, right? So your property has to have 93% occupancy. Your property has to have expenses at 45%. It has to have all the things that you asked for on your first loan, or they're not going to refinance it. So I think a lot of people are just a little not really clear about how that works. And that is why a lot of people are starting to lose their apartments, those, because they're just, their apartments aren't doing well. Like, not only did interest rates go up, but when insurance went up a lot this last year, it changed the expense ratio so much that none of those loans can be refinanced. So people in Texas are having a little bit of problem with that. But yeah, so you have to just ask yourself, what's the worst thing that can happen? And then figure that out, and then just find people that'll help you fix it. So that's what I would say.
Yeah, I love it. I love it. Thank you for sharing that, Letitia. And you mentioned a lot that, and that is awesome that you are working together with your husband, because it's not just you supporting him, right? You guys are working together, right? So, but so balancing work and life can be, a challenge for when you're working with your husband, right? So how do you manage to maintain a healthy work-life balance and avoid actually bringing, the stress and home, because, you guys are working together. So how do you guys balance that out?
I don't know. Do you have any tips for me here? I'm kidding. No. So, at first it was super fun and we were like, oh, this is so great. We're working together. Then it's like, oh my God, we're together like 24/7. But what we decided to do, because we have a very happy marriage, and we were having a good time. But what was really important for us to do along the way, and this was like 6 months ago, we just really decided to define what our real roles were in our company. Because if not, you're doing the same thing all the time and you're kind of pestering each other like, so what happened to that deal? What happened to that deal? What did you talk to that investor? So just really, we decided this is the stuff I do and this is the stuff he does. And then we have other people to do our things that neither one of us like to do. But I feel like that's the easiest way to do it, because then you have clear expectations of what your role is. And then you're not expecting the other person just because they live with you to like pull your weight, or they're not getting in your way and making decisions that you should be making. So yeah, it definitely is a conversation that you have to have and set that in play if you want to be successful. Yeah.
I think this is important just because I mean, a lot of people, you know, there's marriages, you know, people come in, they're dabbling into the industry, they're like, okay, I want to do this. They're being very supported by their spouse. But I mean, any advice that you have, just, you know, I know you talked a lot about delegation and whatnot, but like any advice for someone on this call that's probably working with their spouse or their significant other to, you know, and they see a future in this, any advice that you'll kind of go back and give someone on this call that's kind of dipping into this, you know, to be successful, especially whether their partner is, you know, helping out in the business or not?
Yeah, no, I think it's, you know, I think that's the whole thing in a marriage, right? It's better or worse. You want it to be better always, right? So I think, you know, at the end of the day, you just have to have very aligned goals on what y'all want, you know. And I've learned this when I was a residential realtor before I got into commercial. I had so many people would come to me, couples, they'd like, oh, we want a house, but they never wanted the same house. I would show them tons of houses, like this person wanted this one and this person wanted this one. And I would be like, y'all really need to go home and just figure out what kind of house you want as a couple. Maybe I don't even want to be together anymore. I don't know, but he wants to live at a farm and she wants to live in a condo downtown. You know, maybe that's the problem. So, I think it's like, if you're married, you just want to really figure out some, you know, and I would say 6-month goals, 12-month goals, 5-year goals, 10-year goals of where you want to go. Because if not, you're just going to kind of be lost. Like, oh, we got a deal. Did you write the deal? Are we going to get the deal? Do we have any partners? Are there any capital raises? You just kind of go back and forth crazy, right? You really have to write all this stuff down. And then you have to put who's going to do it. And then I think at the end of the day, you just have to really remember, if you're working with your spouse, that is a person that you chose to love and to treat them lovingly, right? And if you're frustrated, then maybe you guys should just go to happy hour and knock down a couple drinks and get over it. But there's a lot. I know there's a ton of stress right now in the market. You know, we've been feeling it. I think we're on the other end of it. You know, I think apartments have gone up as high as they're going to go. They're coming back down now. You know, they're starting to be more available for us to look at. We've been looking at a lot of apartments lately, underwriting a lot of deals. None of them really work because I don't think the sellers have figured it out yet, that they're not going to sell them at those prices. But, you know, there's one here and there, but there's not a lot. But it's a stressful business right now. You know, 2 years ago it was like super, super fun. Like everybody was just, money was just falling out of the sky everywhere. But right now it's a little bit more difficult. So I think goals are important. And being kind to your partner is really important too. So.
Okay, so I'm gonna just tag team off of what you were just talking about a little bit. So earlier in the call, you mentioned about like finding your tribe. We've talked a little bit about core values, importance of communication. So, I mean, how does that all tie in? Like, when you know you're finding your tribe, like what are those core values that stick out to you?
Okay, so it's funny you say that. So last week we met with our other 2 partners. Well, there's 5 of us now. And we sat down for 6 hours in a conference room writing down our core values, because we do not want to do business with people that we don't like. And I know that sounds crazy, but when you get into an apartment deal, you're with them for 5 years. I do not want people that I do not get along with. I don't want people that don't have my same core values, that don't think of their families first, that don't appreciate and respect everybody else on the team. You know, our core values, the 2 biggest ones were loyalty and integrity. Like, you know, do what you say you're going to do, be respectful to everybody on the team. You know, we're like super hardworking. the people that are in my group though. You know, we like to put in a lot of hours. I don't have kids at home anymore, so that's kind of easy for me. You know, I take care of my mom. You know, she doesn't require a lot, but you know, I take care of her every day. I have to take her somewhere to do something, but we put in a ton of hours. So I don't want to bring somebody on the team that's going to be a partner if they want to work part-time 10 hours a week. You know, maybe we'll put them in as a capital raiser and they just want to bring us money and leave later. That's fine. But if you want to really help me grow my business, you know, you have to really help me grow the business. You have to put in your work. So yeah, I think core values are probably the most important part of looking at partners.
Love it, love it. And then that's a reality right now. So it's harder to raise capital because people are scared, right? Because you know the media, the news, you know, about, you know, banks going in bankrupt and this and that. So people are just waiting for the right time to invest, right? So that's why a lot of people are thinking right now. But right now, Letitia, like building a strong relationship with investors is essential, you know, in real estate. And I see that you are doing a lot of that. So can you share some key principles or strategies for, you know, for establishing trust and rapport with potential investors when you are starting working out together?
Sure. Yeah. I think the most important thing is just to be consistent with your messaging that you're putting out on your newsletter, you know, on your website, on your Facebook page, your LinkedIn, your Instagram, whatever you're talking about, just to kind of be always authentic and consistent. Yes, it's hard to raise capital right now. I think we are trying to raise capital now from different investors instead of our current investors. And, you know, our current investors, they get our newsletter and we are really good on our asset management side. We're super strong. So my asset managers give me a Monday morning report every Monday on every one of our properties. I mean, like everything, like we get it every Monday. So we take that and we share that with our clients every month, but we know what's going on in those properties. So if I have someone who's worried about it, I don't mind communicating with them weekly. But the problem, and it's not so much our properties, but there are so many properties out there right now that investors they've stopped getting their distributions. So that's why it's hard to raise money right now. I don't think it's so much that the interest rates are that high or that deals aren't that good. It's just that people have been getting money for a couple of years and now they're like, I'm not getting money now. And so they're not going to invest anymore. So I feel like the big pivot for us is for us to go find new investors, right? People that have maybe been in oil and gas, or they have everything in their self-directed IRA, or everything is still in the stock market, and just focus and have a little bit different talking points as you're starting to send out things out in the internet, you know, maybe not talking to those same people because they're on the fence right now. They're waiting to see if you're really going to pay them back. And if they're really going to start getting those distributions because they really like them. So our focus is really totally different. We're kind of looking at different types of investors now too. People that don't need cash flow, people that just want money, just want to put their money somewhere, which are a ton of doctors. So we're really kind of focusing on that group right now because they make too much money anyway. They're like, I don't need cash flow. I just don't want to pay taxes on this. So they want, you know, stuff that you can get in a deal and then be very cohesive with them so that when you sell it, you can 1031 their money into something else and something else and something else, because they, you know, a lot of them, even though there's cost segregation, a lot of them don't qualify. You know, their wife is not going to become a professional real estate person because I've tried to talk them into it. Like, you just got to do this. And they're like, yeah, my wife doesn't work and she's not going to work because that's why I became a physician. I want to take care of my family. Right. So, yeah, so I think it's just kind of finding different investors right now.
It looks like before we go to Irma, it looks like Irma has a question. Guys, if you're enjoying it so far, the value that Letitia, her experience is bringing, she obviously has a lot of experience in this, and you know she's going through some ups and downs on certain properties. You know, it just happens. You know, that's the name of the game. Guys, if you're enjoying this, just put some fire in the chat for us, please, just to really show her appreciation and the love. You know, the time she's spending out here with us. So we want to see all 45 of, you know, people, 45 fires just go off in the chat just to show some love and appreciation tonight. So Letitia, thank you one more time. And Irma has a question tonight. How you doing, Irma?
Hey, good.
So thank you so much. I really appreciate you coming on, and I just love what you're saying. So a little bit more on what you were just talking about investors being shy about investing, and you said something about they're not getting distributions. So what are some of the reasons why they're not getting distributions? Is it because they're not, did they just stop, they were getting them, they haven't sold yet and they're not getting them? I don't know. I mean, can you explain?
No. Yeah, so none of our properties, we haven't stopped distributions on them. And a lot of people haven't, but I would say half the people out there, because especially in Texas, the increase in insurance was a little bit of a surprise to a lot of people. So 2 years ago, when everybody was underwriting deals, they weren't underwriting with like that huge increase in taxes. I'm sorry, they were writing it on the taxes. They weren't writing it on the insurance. So I'll just give you an example. We have an apartment complex in Corpus Christi, Texas, 142 units. When we bought it, a year ago, we did our underwriting and we said the insurance is going to go up to $1,200 a door, which is what we thought, because it was at $600 a door when the person had it. So we underwrote it so that would happen. It came in at $1,000 a door. So we're good. Everything's fine. But a lot of people out there did not make any adjustments for insurance. So they got into these deals, they started paying all of their investors, and then the insurance this year went up. So they had to stop distributions because their properties are not making any money. Okay. They're making enough to pay the rent, to pay the mortgage, but they're not making enough money anymore to pay for distributions because taxes went up, because property values went up, and then insurance went up in Texas. So Texas and Florida are getting hit pretty hard on that. So a lot of the owners are like, okay, we can't give anybody their money right now. So then they've kind of changed the business plan. And they've told the investors, like, no money this year, maybe next year. And so they're trying to figure out ways to create more income on the property, putting in tech packages and all kinds of stuff like that. And possibly, they could increase the rent next year a little bit more and make sure that they do start getting distributions. But those particular properties, especially the ones that have floating debt rate too. I mean, some of those apartments went for like their mortgage payments were $50,000 a month, and now they're $80,000 a month because they have floating debt, right? So all the profit in the business is going out the door. But it's not that those investors are going to lose their money. It's just that they're not going to get any cash flow now. So when they sell in their 5-year business plan, they'll recapture some of it then, but they're not getting it now. So that is making people who've been super happy for the last 5-10 years investing in apartments, they're just like, what happened to my cash flow? So yeah, so they're not going to want to put any more money in.
So I can understand the increase in insurance, and I mean, maybe you might know this, but I mean, why was such the increase so much? I mean, for Texas and for Florida.
Because there was a couple of big insurance companies that pulled out of Texas and Florida, so that left the ones that were here, their risk mitigation, they had to increase the insurance rates.
Thank you.
So yeah.
Yeah, and I see also, just to add a little bit, a lot of natural disasters, as you see, right? So even I remember that earlier today I have a conversation with our insurance broker, and he was sharing that, right? That actually the cost that they gave you like a month ago, probably they are going to be changing because these insurance quotes are changing that fast, right? So that's kind of the things, like natural disaster, and this is nationwide. It's not just but it's affected a lot in, especially, like a Houston area and also the Florida in general. So yeah. Especially because they get these hurricanes, they get these storms and this and that. But yeah, that's something that I will add to this question. But that was a great question, Irma. And then, so right now I have a question for you, Letitia. So building a long relationship with investors can lead to, I will say, repeated business and referrals, right? So what strategies do you employ to maintain and strengthen this relationship over time with investors?
What strategies do we have?
Yes.
I feel like our strategies, and I'm going to be really honest, I haven't had investors for a long period of time because I've only been doing this a couple of years, right? But I do know that the investors that we have, we are very engaging with them on our communication with them, and I think that makes a big difference. We kind of, we make it a point to really try to communicate them in a very authentic way. So We send out a monthly newsletter, but we always make sure it has pictures in it. It's not just a letter. And we do like a quarterly investor webinar that we send out so that they can actually see the people on the team. And we put photos of, every time we do CapEx, we take pictures of all the CapEx that we're doing and we send it out to the investors so that they really have a feel for what's going on. And we invite our investors to our webinars. These are ongoing ones so that they kind of know that we're knowledgeable about multifamily, and then so they can learn along the way too, because a lot of them are busy professionals and they have businesses. At first we kind of went after a lot of business owners. That's where we were looking to get people, and they're super busy. They don't have time to do this, but they do show up for some of our webinars sometimes. And they learn a little bit more and they're excited about that. So you just never know who's going to be your next person. So I think it's just nice to share. And like I said, I think authenticity is like one of the biggest things. We'll take calls at any time with our investors. I mean, like anytime, like they can't make one of the calls, we'll work on the weekends and the evenings and the mornings early, whatever it takes. We just want to make sure that they feel comfortable that we're taking care of their money, and that's what sets us apart. I feel like after they meet us personally or on Zoom, I feel like if I can get someone to that point, they're going to invest with me, because my husband and I are going to talk to them about our family values, what we do on the weekends, how we take care of them, and how much time we'll spend with them. And I think that's different from a lot of other companies out there, because they're just like, get on my Zoom, here's my portal, see you later. Thanks for joining us.
Yeah. And I totally understand that, Letitia, because I want to be honest with all of you guys here in this call. I have some LP investments, right? Where actually I get into the webinar, I guard the money, and then the only thing I'm getting are emails, right? So, okay, that's cool. I get the information about how the property is going, but sometimes you wanna be learning. You're looking also to learn, even if you're not gonna become an active GP or managing deals in the future. At least you are looking for some way get some value and learn a little bit, right? So that is awesome that you are doing those webinars and those calls with investors, because I'm sure they're gonna be so happy about you guys are providing an extra value and everything, right? So that is amazing what you share right now, Letitia. But we have Jimmy right now. Jimmy, you have a question, so go ahead, man.
Thanks, Jonathan. Hi, Letitia. So thanks for sharing your knowledge here, and just following up on something you just shared earlier on the investor relation, and you mentioning like right now it's very hard to raise capital from the investors. So my question is, what do you continue to do right now to maintain the relationship with these investors? Why are you not able to raise capital with them? And what are the communications? What do you tell them at this point?
Okay, so our investors that we have currently, since we haven't stopped distributions, we are continuing to bring them back into our deals. I do have a whole group of investors from Chile that invested in my first apartments, and they've invested in my other one. I have a property, a Class A 80 unit in Wichita, Kansas. And they're actually flying in next week from Chile, 4 of them, to look at this apartment that they've never seen in Wichita. And so our asset management team is going to meet them. So yeah, I think that we are continuing to see that we are bringing value to them. And sometimes it's just really being patient for them, right? So I've sent them deals and they're like, yeah, I don't like it, right? So that's part of the problem. Like, they don't like the fact that the returns are not what they're not 2x, they're 1.97, and they're used to seeing our OMs where the returns are a little bit better. But it's an education. It's just really educating them, like, yeah, the returns aren't as high because we don't have 3.5% interest anymore. Now it's this amount. And we generally, at least our team, we do not ever put less in our OM for our general partners, just because that just to enhance their returns, because we actually feel that we do a really good job at finding good deals. So and I don't know how you guys underwrite, but we always do a 70-30 split with our investors, because we are all full-time employees. We don't have any part-timers. We do this Monday through Sunday, from the time we get up to go to bed. So we always do a 70-30 split. But so if interest rates are going up, the people are not going to get as much money as a return. But if you look at our deal versus any of the other OMs out there, they're still going to get more money off of ours. So I think it's just a re-education, because for a while they were just making so much money when they first got into a couple of years ago, right? I mean, we were like 3xing deals and everybody was making like 39% returns. And now, the reality is that boom is over. And now if you can get almost a 2x in 5 years and you're getting 20% a year on your money, you're not going to get that anywhere else. So I think it's just more education to them, and it just takes a little bit longer of time. So, and that's fine. We have time.
Exactly. And I love it. I love it. And then you mentioned that, the deal, conservative underwriting, and all those things are important, right? Because you want to make sure that people actually, as soon as you double, you triple, you do more than that, their money, you want to make sure that the people are coming and invest with you next again, right? Because they will love that, right? So I know that you mentioned that you are really conservative in which deals are you doing, because you want to make sure that people are coming back, to invest with you, right? And I love that. So do you think that you can share a little bit about, those conversations that you have with people in terms of setting expectations with them about what are they getting into as soon as they invest with you and your team?
Yeah. So, what we've done recently too is that we're pivoting a little bit, because we also believe that, we love multifamily, but multifamily is in a hard place right now, especially with interest rates are high. And if you can't if you can't get an assumable loan right now that's really low, getting new debt is very expensive. And we've kind of just, even though we're underwriting deals in Texas, we really want the Midwest right now, just because insurance is cheaper. And there's still really good deals in the Midwest because it didn't get overinflated in price like Texas did. So Texas is kind of going down on values right now. Maybe not in Dallas. Alicia, I keep telling me not in Dallas, but I feel like it's not going way up anymore either. So we've pivoted a little bit. We are actually, my husband and I are currently building self-storage in San Antonio, 500 new build on the south side of San Antonio. So we are kind of getting different products for our investors to look at. Self-storage is great. Returns are a little bit better than multifamily. So we're giving them options as well. We're very interested in the new build to rent concept that's coming out. That's one of the reasons that I'm having Neil Bawa at my investment summit, is he's going to spend the entire day with us talking about this, because I really want to learn what opportunities lie for capital raisers, for general partners, just anyone to get involved in that build to rent space, because numbers don't lie. And if interest rates stay where they're at, I think like a single family home mortgage is like at 7.5% right now. People cannot buy single family homes, and people that have children and dogs, they don't want to live in apartments. So build to rent seems like the normal next place for us to be investing with our investors. So that is something that we're actually looking at too. We just want to see if there's investments out there that we can put them in. And I think they'll appreciate it too, because they'll know that we're actually really trying to take care of them as investors at looking at different options for them to secure their money. So
I love that, Letitia, and this is about diversifying your investment, right? Because, that's something that we mentioned to our investors, to our people, about diversifying, not all the eggs in the same basket, right? Because, sometimes, there are market cycles, and then, sometimes during some cycles, some of those strategies are being affected, right? So it's about diversifying and trying different strategies. So I love that you share that, Letitia. So that's good, because that's something that we always tell people, like, there is different strategies in real estate. It's about diversifying. It's about, investing in different class assets. So I love that. So right now we're at top of the hour, guys. So as soon as right now we finish this question, so If you guys don't have any questions, after this, we will go to a breakout room. So I see that somebody's coming with a question. But before I will give, the question to Helen, Letitia. So do you have any advice for somebody that maybe is new in this call, that maybe is looking for, starting in real estate and they don't know about how they can start in this business?
Yeah, I think meetups are probably the best place to start, because I feel like I don't. Do you guys do a meetup, or is this your meetup?
Yeah, we do a in-person meetup too.
You do in-person. Yeah, so I feel like in-person meetups are the best place, because you will go there and there'll be other people that are kind of starting in the same place that you are, and you can get a buddy that'll learn with you and kind of help you along the way. I think most meetups do now have some type of an education component to them. I know the one in San Antonio, there's apartment educators here, and they have a program that you can join. I have women in multifamily San Antonio, and they have, like, every week they have a webinar on different topics. So I think that there's lots of free resources out there. So, I mean, that would just be me. And there's so much on YouTube. There's so much to read, and there's so many books that you can look at. So, my whole deal is I'm on the money raising side right now. So I'm really kind of, I just joined Raise Masters this last year. I don't know how familiar you guys are with Hunter Thompson, but I joined in December of last year. And that's been a fantastic program for us, because it's modules and it's like almost too much information. It's like taking a college course on raising capital, but they have daily calls with coaches. They have a weekly call with your own coach. So it's a little bit of a pricier program. It's like $20,000 for a year. But if you want to be a capital raiser, they will teach you everything: how to do your website, how to do your funnels, how to do your email marketing, how to set up a fund if you want to set up a fund. So they've got everything in that program. So if that's what you're looking at, I think they would be a great resource for you. And there's all kinds of books you can buy about multifamily, but I think start at your local meetup would be the best place.
I love it. I love it. So I'll give the word to Helen after this, but Letitia, so there is something that people, maybe they don't visualize that, right? So you just mentioned $20,000, right? But at the end, if you are going to be making millions of dollars, so those 20,000, probably that's a really good investment, right? I believe that, especially because they help you and get into the systems and about somebody that is already doing it, right? So you are already saving all those mistakes and all those, the time, because time is money, right? So thank you for sharing that. So that,
I feel like it's anything else. I feel like you're going to have to invest in yourself one way or the other. And it just depends on how quickly you want to get started, right? Mm-hmm. You could learn all this yourself, or you could go pay Hunter Thompson $20,000 and he'll just walk you through it, which is good, because that was really our weak spot, because we knew how to do everything else. And then after our first couple of deals, we didn't have any investors, and I did not, and I love social media. I mean, I used to have a marketing company, for God's sakes. I used to do videos for every business in town. So I know how to do that part, but I still didn't know all the things that I learned in there. And it has a lot to do with just, hashtags and keywords and, which platforms you post on and what you should say. And, just as much like little things, like if you look at your Instagram page, like the first 3 things it says about you is the most important thing that people follow you. And I think the thing I learned the most was that you really have to have a niche, and you can't just be everything to everybody, because you can have like 100,000 people following you, but if you don't relate to any of them, they're never going to buy from you, right? So what I've learned about learning how to find people from marketing online is really just getting your own niche. So, if you are a physician that's wanting to find real estate to offset your income, and you go to my page and you say, I help physicians invest in multifamily to reduce their taxes, you're going to look at that and go, that's the person I need to talk to. Or I can say, oh, I'm helping people save money on their taxes through real estate. That's not going to resonate with you, right? So it's really just trying to get all the stuff that goes on social media, someone to look at you and go, that's me. I need to talk to her, right? So, and just over the last year, I've had so many people contact me that I just didn't even know. I just put something on my Facebook and they're like, hey, you said this, I want to talk to you about it, right? So that comes back to the very authentic part of it, right? Just tell your story, and then people who are interested in your story will reach out to you. And the other people that aren't interested, it doesn't matter because you can't help them anyway. So
Love it, love it. Let's go, Helen. How are you, Helen? Welcome to the call.
Hi, everyone. Hi, Letitia. Thank you so much for sharing the information here. It's super valuable. I have been learning a lot from you. My quick question is, for people who is starting, they might have some savings, maybe 25,000, 55,000, and they would like to know what to do. So my question is, with all the experience that you have already, and let's say that, for example, let's pretend that you are going to start from zero, but with the knowledge that you have right now, what would you do with those $25,000 or $55,000?
That's a good question. I'll tell you what I did. Okay. So, I know this sounds crazy, but my husband and I spent like $100,000 last year on Masterminds because we really felt like we had to get in the room with people that had lots of money, and we really need to be around people that we wanted to be, right? So the first one was, I went to the Brad Sunrock event like 2 years ago. And I remember going, it was like his AIM NatCom that he does up in Dallas. And we sat on the front row because I had just gone to Vegas at Tyler Devereaux's multifamily peak partnership, which was cool. I met a lot of cool people. But I went to the Brad Sunrock event and we had already had a couple of apartments. So they were trying to get us to do personal mentoring. I was like, I don't think I need personal mentoring, but they had this mastermind and it was $45,000. And it's only 3 events, right? And I was like, wow, $45,000, and I remember my husband and I talked about it for like an hour before we even joined. And I thought, what do I expect for $45,000? Is this really going to take my business to the next level? Right. And out of that group, we did 3 events. We did one, which was super good. The first one was my favorite one, was in Atlanta, and Jesse Eatsler, we got to go to his boot camp, which was super fun. He's the coolest guy in the world. And then the second one was in Mexico. And then the third one was in Santa Monica. And within that 9 months of being around those people that all have thousands of doors, all have the best attorneys, all have all the things that we were needing, I would have paid it 10 times over, because it's not that I feel like the education piece was the most important part, but it was being around all those people that thought bigger and wanted more things and had bigger goals than I did. And it made me very quickly realize that I can be a millionaire. It's not really that hard. It's just going through the steps, right? So since then, I think we got like 6 partners out of that deal in different deals. One of the people that we met there, they're actually partnering with us on our self-storage, because we couldn't do the self-storage unless we had somebody that our bank wouldn't give us a loan unless we had somebody on our team that had self-storage. Well, we met a guy there, he has 600 units. So he's our partner on that. We met a couple of different people that were just big money raisers, capital raisers, that helped us finish some of our deals. We get calls every week from people that are like, hey, we found this deal. Do you and Paul want a GP with us? Do you want a JV with us? So I feel like you have to make a decision that you're just going to do it. Right. You just have to get in the room with the people that are doing it, because if not, you can just be talking about it for a really long time. And the thing about it is too, if you spend $45,000 on something, you're going to get your butt to those meetings. You're going to listen to everything, and you're going to work your ass off to make sure that you didn't waste that money. And, I think it's the best decision I ever made. We did that. And then we did Hunter Thompson's deal for $20,000, and we've been doing a lot of stuff. But now when we do things like this, we truly try to put goals to everything. So, for example, I'm going to Raise Masters next week. They have their Raise Masters has in New Orleans for like a week. It's the people that are in it, but they're having like a mastermind, right? And I think it cost me like $2,000 to go to it with our rooms and everything. So when I'm going to that event, I'm not just going to go, my husband and I, we have a goal. It's like, we are going to meet 5 people at this event that we're going to be authentic and spend time with them. And those 5 people, whoever they are, we're going to build a relationship with them in the next 12 months. We're going to fly to whatever town they're living in. We're going to have dinner with them. We're going to get to know their business, and we're going to do a deal with them. And I think being very specific and targeted with your goals on that level is worth it. Yes, spend the money on it, right? But just do what you say you're going to do. Don't just say, I'm going to this event, I'm going to that event, but just be so specific, right? I mean, I just went to the one they had in Dallas, the Brad Sumrock event. And I told myself when I was going there, I'm going to meet 3 people that I don't know, that I'm going to do business with, and I did. I met 3 people, and I'm gone. I've flown, I've looked at their apartments. They have deals for us. I met Sergio at that event, and I still, where is he at, Sergio?
I'm right here.
I want to find out. I still am going to talk to you about car washes. Yeah.
Yes,
so.
yes. Let's do it. Let's do it.
You just have to be, if you're going to spend the money, just do it. Because I mean, people spend money to go to college all the time, right? And they don't get anything out of it. They just get a piece of paper. If you have $25,000, go find a mastermind to be in, because I think masterminds are probably, my opinion, the best. Because then you're in a group with people for a year, and you're on calls together, and you hear about their struggles, and the team together is working to help you find that, right? That's why my husband and I decided to do the investment summit. It's a mastermind. It's like, we're going to be together for 4 days with 40 people. And then for the next 6 months, we're all going to meet on Zoom once a week. And when they leave that mastermind, everybody's going to have their 6-month goals, and we're going to work on them all together as a team, because I want to help those 40 people, and I want them to help me, right? Because we have to grow together. So anyway.
Thank you so much.
That was amazing. What an answer. I love it. I love it, Letitia. And yes, 100%. I love your mindset. And that's something that people sometimes think, they think that, that it's an expense being in a mastermind, paying to be in a room, but at the end, it's an investment, because if you have a goal and you have a commitment, like you mentioned earlier about, meeting 5 people in that event. So that's when you see results in your career, right? So I really love that. So right now we're a little bit at top of the hour. So Letitia, so thank you so much, for being with us right now.
It's
So
wonderful.
for you guys that are here, thank you so much for being in this call. That was amazing information. I took a lot of notes right now, so I'm sure you guys did too. That was thank you, Letitia, again for sharing that much information with everybody, because it's about your journey, right?
Yeah, it is. And thank you for having me on. And if you could just share, I do want to invite everyone to look at our summit, just to see if anyone has any interest in going. We still have like 6 slots left of the 40, but if anybody's interested, look at it. I would love to have somebody from your team come. It would be great.
Of course. So do you have the link right now that we can share on the chat, or you can post it right now, Letitia? Yeah. I'm sure a lot of people would like to even connect with you, because that's the whole purpose of this room, or the cash flow empire, just to build those connections, those relationships with, it's about future partnerships, right? So we really believe in that. So you can post that. If you let us know, you can post that on the chat. We'll be more than happy to, to share that here. There we go. All right. So while Letitia is looking for that, so I'm gonna just finish the recording. So thank you guys so much for being here. I appreciate you guys again. So I'll see you next Tuesday. Thank you everybody for being here, and that was amazing conversation. So I'll see you guys next week. Thank you.